Welcome back to the channel, guys. So in today's video, I'm going to be talking about this trade over here where I made $12,000. But I also want to talk about the next 2 days, because the next 2 days I did not trade. So in this video, I want to talk about how to differentiate between which days to trade and which days to not trade. So now we're on the chart. So I'm going to explain the trade that I took, why I took it, why I chose the stock, everything. So this stock is called RXT. And this Wednesday, it started gapping up. Now, what does that mean? What does gapping up means? Well, you can see over here, we have the two dark areas. The dark areas is the normal market hours. And these areas over here is pre-market and post-market. So you can see that pre-market, the stock started going up. Around about 8:15 a.m., the stock started going up. Now, why did it go up? Well, the reason it went up was because there was breaking news. When there's breaking news, usually, if it's positive, the stock's gonna go up, right? Because everything has to be priced in. So if the stock releases an announcement that they just made $1 billion or they've cured some cancer, right? Stock's gonna instantly pop up. And that's what happened to this stock over here. So news came out, started surging up immediately and kept going up, kept going up. Now, I don't trade the stock while it's surging up. I used to try that and stuff. It's just so unpredictable. I completely stopped doing that. What I do is I wait for the stock to open in the normal market opening at 9:30 and then I trade it. So when the stock goes up, it becomes a gapper, right? So this stock is clearly gapping up. It went up from like 44 cents and it opened at like $1. So it's gapping up pretty significantly. So it gaps up, and so now I'm interested. And we can see in the first couple of minutes, it starts surging up. We see some topping tails. Why do we see some topping tails? Because of something called pre-market high. So if I look at the highest level pre-market, it's about this level. If I put a line, you can see that it's finding resistance at that level. The reason it finds resistance at that level is because you have a lot of people who are dumping their shares. So when you see a lot of people dumping their shares, you're gonna have a lot of top wicks like this, right? So I'm not trading this so far. I'm completely ignoring this because it's just too much resistance. I don't want to be involved. So I keep waiting, I keep waiting, I keep waiting. It surges back up again, this time breaks pre-market high, breaks the high of day before, and then it does a little pullback. As you guys know, I love the bull flag. It's the only pattern that I trade. I don't trade any other pattern, any other strategy. The bull flag is the only thing I trade. So I'm waiting for a bull flag and I see it right over here. And there's a couple things about this pattern that I absolutely love. You can see that it starts surging up on some pretty good volume, right? Volume spikes, which is good to see. We have a pullback candle over here, but notice the volume on the pullback candle. It's nothing. It's super little. Also, you can see that it's finding support at the previous high. So it's like 3 different things are happening at once, all positive. I'm like, this is perfect. I'm gonna go in for the trade. So that is when I go in for the trade. Eventually ends up squeezing up, and I can see there's a bunch of resistance over here, topping tail, topping tail, topping tail, and I end up selling. That was a great trade, made 10%, $12,000. Amazing stuff. So now I'll show you guys a live recording of me taking this trade so you can see my actual entry, my actual exit, everything live. Let's go. Alright guys, so now we're on the live trading archive. So I'm going to show you how I took this trade. So again, same stock. We can see it found resistance at pre-market high. It went down, started curling back up. We see that bull flag pattern about to form, and I'm ready to enter. So let's play this. Let's see what happens. Dips down for a little bit, goes back up. Immediately I enter. So now I've entered into the stock. I really like my entry price, super good. Very easy to get filled when the volume is insane. So that was very good too. And that's another reason why I like these gappers. Because the volume usually is very good. I can enter and exit literally in a couple of seconds with very big size. If I skip forward a couple of minutes, you can see it's not really doing much. It's going sideways, it's not really breaking new highs, it's not doing much, it's just going sideways. But at the same time, I'm still holding the stock because my mental stop loss is at this pre-market high level. So remember, we drew this line and we can see that that was pre-market high before it found resistance. Right over here, we can see there's a lot of resistance. Now it curled back up and my mental stop loss is around about that pre-market high level. If it dips down to that pre-market high, I'm just going to sell. But so far, it hasn't hit it. It's starting to go up slowly, so I'm still going to hold the stock. There we go. Breaks. So we break the little range that we were going in. I'm still in this. I'm hoping to break that high of day level, and I want to see a nice big push up. You see it's continuing to go up. Just waiting for it to break that level. There we go. Almost about to break it. 126 is the level to beat. And it breaks it. So this is very good. I can see that it broke it. It went up by 2 cents. So I'm still holding it. Right? Okay, now it went up again. 1 more cent. So I'm still holding this. The worst thing I could see is if it breaks it and immediately sells off. If it does that, I'm going to sell. But because it broke it and it continues to go up and up and up and up and it's holding its level, I'm going to continue holding it as well. So now 130 is going to be the next big resistance point, right? With these cheaper stocks, every 10 to 25 cents, we have resistance points, resistance points, resistance points. There's a lot of people, I call them thick boys. There's a lot of people that are just dumping shares at these numbers. So $1.50, you're going to have a lot of thick boys. $2, you're going to have a lot of thick boys. So if you know that there's going to be a thick boy at a specific price point, the best thing to do is to set your profit target at that price point. Because now you get liquidity and you get a pretty good exit. So we can see that 130, it's beat pretty well, right? We see some resistance now, a bit of a topping tail, but I'm still going to hold this, right? We've had a pretty big surge up. I'm not going to expect this to just continue going up. Obviously, I'm going to wait. So these little dips, it's completely fine. If I skip forward a couple minutes, you can see that it's kind of finding a lot of resistance at this area. But you can see it found support near the level that was the high of the day before. So it's kind of like a higher high thing. So it goes up, goes back down, it goes up, it finds support on the previous high, then it surges up again, right? It finds support on the previous high, it surges up again. So this is the classic like higher high, higher low setup. I'm going to continue to hold it until I see some serious resistance. A couple minutes later, you can see it's still trying to break that area. It's going to try really hard. Now you can see volume is decreasing, which is a good thing for us. Now I'm just waiting for it to make a new high, beat that 134-ish level, and I want to see what it does when it breaks new highs. It's about to break it, breaks it, 135, 140. Immediately you can see a bunch of resistance. Look at that. Immediately a big sell-off. Could not hold those levels. And after that, a couple of seconds later, when I can tell, yeah, this is not going anywhere, I end up selling right there. So that was a live trade that I took. After that, you can see it kind of went down, went back up again. But I usually like to finish my trading at 10 a.m. After 10 a.m., I like to just stop trading. That's it. I only trade for around about 30 minutes a day. That's it. So just trade for 30 minutes and just move on with my day. That's how I like to do it. Now, if you guys do want to learn the strategy with me one-on-one, click the link in the description to apply for my mentorship. In this mentorship, I literally teach you everything I know, and I'm going to review every single one of your trades. So if you do want to apply for that, click the first link in the description. I'm not going to do it for too many people per month. So if you do want to get in, click that link right now. Next thing I want to talk about is the No Trade Masterclass, because I believe genuinely that no trade days are just as important as days that you trade. And that's super true. Because the thing about a no trade day is that nobody talks about is that you don't lose any money. So if the market conditions are absolutely terrible, but you decide to force a trade, you're just gonna end up losing money. And one of the things about compounding is that the worst thing you can do to compounding is to interrupt it. That's the worst thing you can do, right? Because now you have to start from beginning again, then you interrupt it again, start from the beginning again, interrupt it again. It never just gets to shine like this. The only way you can get to doing this is if you like prioritize, like religiously avoid losses as much as possible. And one of the easiest ways to avoid losses is to have no trade days. A no trade day is a successful day. Like if I have a no trade day, I'm not like, oh no, we didn't get to trade, I'm so mad, I wish we could trade. It's like, whatever, let's just wait for another day. It's gonna come soon. Soon enough it's gonna come. So let's just wait for that day instead of just forcing trades and losing a bunch of money. So now the question is, how do we figure out what days to trade and what days to not trade? And for my strategy, it's super simple. So if we look at these 3 stocks for market open, right? These are all gappers. If we look at them, it's going to be pretty obvious that we shouldn't trade. Let's look at the first one right over here. This stock opens, immediately dumps down, 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 down. I'm going to completely ignore this. I know a lot of people, what they do is they wait for some random like indicator or some random entry point and they start trading when the stock is below the EMA. You shouldn't trade the stock when it's below the EMA. If you want to trade the stock, then short it. But don't go long if it's below the EMA. So I'm going to completely ignore this. Now let's look at the second one. The second one is a little bit better. We can see it opens up pretty strong, finds a lot of resistance, as you can see with this topping tail, but then surges back up. This is really good stuff. Now I'm waiting for a pullback, for a bull flag. Do we get a bull flag? No, we don't. We can see a bull flag is about to form. This candle, right? If it went up and up and up and up, beat this high over here, it would have been a bull flag. I would have entered. But it never did that. It just started dumping down. So I'm not going to trade it. So you can see how I'm just ignoring these setups and not trading them. Let's look at the last one over here. First candle surges upwards, massive topping tail, just dumps down, terrible, messy, sideways price action. We're not going to be trading this, and it just ends up dumping down. So you can see it's very easy if you have like an abundance mindset and you tell yourself, listen, I'm only going to trade the good setups, because the good setups is where I make the most amount of money. I don't make money when stocks going sideways or weird, dodgy price action. I only make money when stocks are making really clean, solid moves. So I'm just going to wait until the next one comes around. Now, if the good setups come and you miss them because you're scared or you have trigger finger or whatever, now that's a problem that you really have to work on. But if the good setups come and you don't ignore them, you take advantage of them, well then you're going to be fine. Now don't forget, the application to join the mentorship is the link in the description. Go check that out if you're interested. Like and subscribe to the channel, guys. I would really appreciate that. Thank you for watching the videos. Make sure to apply the mistakes, the lessons that I told you. Make sure to apply them and you're going to be a better trader. Thank you for watching. I'll see you guys in the next video. Peace.